All right, well, you read the title. Today is going to be a red day recap. These days never get easier, but they're worth talking about because this is when we really learn and improve as traders. Today, fortunately, although I did close red, I didn't tilt, right? So it wasn't full on emotional trading. It wasn't gambling. It wasn't just risk management out the window. I had stop losses in the market. It was just a combination of overtrading and kind of marrying a bias. I'm not going to sugarcoat it, right? I could have been better. I could have adapted to price and realized that my bias was wrong. And I could have done a better job of cutting my losers sooner, right? Instead of having this wishful and hopeful thinking that price would come back. So I'm gonna cut the music. Let's get into this and let's recap what went wrong and what we're gonna do to improve. So you saw the thumbnail. Fortunately, I didn't lose $44,000 today. That was back in June. I had about $6,500 worth of profit in 750K funded Apex accounts. That took me about 3 weeks to make. I made that money in May. It was June, I was trading them and I made a handful of mistakes. Those primarily being I was trading them all together. Shouldn't have done that. I should have broke them up into at least 2 or more groups. I was trading normal size. I should have greatly decreased my size from my usual 2 minis down to 1. And third, I should have prioritized risk management. I didn't need to make any more money, right? I was just kind of protecting profits, accumulating those 8 days before my next payout. I had withdrawn some good money on those accounts. I think I'd taken out maybe 30 grand across those 7. However, I could have had a $44,000 payout had I just kept pressing on and accumulated those 8 days. So those are the mistakes I made there. After that happened, it was a really tough, the weekend sucked. I'm not gonna sugarcoat it. I think that happened on a Friday, but it was a terrible weekend. But I brain dumped. I sort of just, all of my thoughts, what led to that, what mindset was I in prior, why was I so emotionally provocative, right? Why was I so easy to be, tempted to break rules and just go all sorts of places? So that's what I did, and I learned my lesson. These losses, these terrible emotional trading days are bound to happen, right? We're humans, we're not perfect, we're not robots. So they're bound to happen. What we want to do is just mitigate the risks that we can. So again, going back to trading multiple groups, decreasing your position size, all of those things will just minimize the effect and hopefully not allow it to spill over and affect you more than it should. So that was back in June. Today wasn't as bad. I'm only down about 5 grand today. However, that 5 grand was preventable. I did overtrade and I did let my emotions come into play in the sense that I was sticking to a bias that clearly was being proven wrong. So jumping into the setups today. Okay, so my first trade today, what was going on in the market, right? Let's look. So we had a fresh 15-minute fair value gap that was below price. We had just swept high of day, and I was looking for a short down into that 15-minute gap, right? So this was the open right here. Price had moved up. It had swept these highs here, right? This was our high of day. We moved quite a bit overnight. So we swept high of day as our manipulation moved to the open. So I thought, okay, great. I'm looking for a 1-minute inversion and I'm looking for a short down into those equal lows. And that is what we got. However, this trade worked out. This was trade 1, right? I took the 1-minute inversion as you see here, and I exited at this internal swing low. So on the charts right here, we see that 1-minute gap. Took that at the close, exited at the swing low, price moved down. Now it didn't tap the 15-minute gap just yet. Very important to note. Instead, what had happened was we created more equal lows. So we had equal lows here that were formed pre-market. Price moved down. This was after I'd exited my short. I netted like 20, 30 points on that trade. So I was up good on my first group. I was done there, up about $800 on that first group per PA account. So that was great. I moved on to my second group thinking, okay, another short will probably come up. Right, being that we had equal lows and we still had not swept them. We had just created another set of equal lows. So my second trade was another short, right? I'm still thinking price is bearish. We're gonna tap down into that 15-minute fair value gap, which if we look back, we actually never did today. And this is where that bias overcommitment comes in. This is where I should have realized I was wrong. but I wasn't. I kept looking for shorts. I made money on my first short, but I still kept looking for shorts. So this was that 15-minute fair value gap, right? We see the equal lows pre-market, we see price come down. This was just after our first trade, didn't tap into it. So I'm still looking for shorts. Second trade comes up, it's another 1 minute inversion. The problem here, first trade was great. It was A+ in my opinion, it played out. The problem with the second trade was that we had just tapped a discount of our New York range. So New York low to New York high, we had just tapped a discount. And that is where I mistakenly shorted. Sometimes that works out, sometimes it doesn't. In reality, today is Friday. Not only was I green on the week, but I was green on the day already, so I should have really been more selective with my trades. I should have been prioritizing profit protection, not seeking more. So I took this trade, and this was a stop out. Now, this is where my stop should have been, sort of just right at the wick of this displacement candle. I was looking for an exit at this fresh 1 minute fair value gap, right? So 0.8 risk reward, that's about as low as I'll go. That's where my stop should have been. Unfortunately, mistake number 2 here, I didn't have a hard stop in the market. So after this 1 minute candle, I was down a good amount, but nothing had gone absurdly wrong. Price suddenly opened up. This was right at the 10 a.m. Eastern hourly flip and just rallied. And I don't know if you can see here, but you know, these are 20-point increments. This one candle was nearly 60 points. So I was suddenly down, you know, a good 50 points. I did take this with half size, so only 1 mini. Right, I trade 150Ks, but I'm trading accounts that are up $5,000 in real profit. So I should have still, you know, had a hard stop in the market despite having taken half size. So I didn't stop out where I should have, and I ended up cutting this for something like a 50 or 60 point loss. Absolutely terrible. You know, that's over $1,000 with 1 mini. So suddenly, boom, off the bat, I've just reduced my payout by a great amount. That's when the emotions really started kicking in. What I always tell my members is that we never want to take trades we regret. This trade I did regret for those reasons, right? We had tapped a discount of our range. We had retraced to this 1 minute order block. No good, right? So now I'm starting to regret my trades, and I sort of get into that defensive mindset where, okay, how can I get this back? How can I get this back, right? Having regretted taking that setup. Again, 15 minute was still untapped at this time, so mistakenly I was still looking for more shorts. Trade number 3 today, another 1 minute inversion. Now this setup, it's not that the setup was poor in and of itself. The problem here was, you know, we were really volatile today. So I took this on the 1 minute close, just a bit of a retracement to the inversion edge. I was looking for an exit at the fresh 1 minute fair value gap here. All is well. My stop was at the CE of this 1 minute fair value gap that was bearish and that was holding price down. What ended up happening, price poked a little bit higher. It never closed above this 1 minute bearish gap, but it did stop me out. And what happened after it stopped me out? It absolutely sold off. Really huge sell off there, right? So my entry was 893, price sold off over 100 points after stopping me out. So now I'm 3 trades in. First one was a winner. Those accounts were done. Second trade was a loss that I regretted taking. And this third trade it felt personal, right, in the market. I was like, okay, you know, I've been trying to short. This one, I get stopped out and then price sells off 100 points. I could have been green on the day had I not been stopped out. That leads to trade number 4. And as you can see here, this is where I say it really went wrong. This was a terrible setup. I never short after internal liquid, or short or long. I never enter after liquidity internal has been taken, and I really hate entering at the, you know, extended range of a price leg. So price had already sold off 100 points. Now suddenly I'm looking for an inversion short. So I was sticking to my entry model, but I wasn't using discretion, nor was I using discipline, and that's a terrible combination right there. Price inverse this lower 1 minute. I got in all the way down here. There was another 30 second that I was waiting on, so my entry was really low. We had equal lows there, so in my mind, I'm trying to justify it, and I got stopped out. Right, this was like another 30 point stop out. So minus 30, minus 30, minus 30. That $5,000 in profit that I had was absolutely obliterated. You know, 3 of those trades and that profit is gone. And that's when you hit max drawdown. So, you know, first trade was good. It was a short, it was an A+ short, okay? It worked out. Second trade, I was still trying to look at how I can get short because I thought those equal lows would get hit. This was not a good entry though, okay? This is not a good setup at all. We had tapped a discount, we had tapped a 1 minute order block. We were already, this in and of itself was a 100-point sell-off right there. So I'm continually shorting the low of a price range, not good, right? Just because I'm trying to get that, what I want to see, I'm trying to force it. So that was trade 2. Trade 3, I had just gotten stopped out. It was an okay setup, but I got stopped out and then price sold off, and that's sort of what triggered me to kind of revenge trade and take this terrible 4th and final trade. That's where I had to just call it after that, right? I was down $5,000, I'm done. So that was my trading day today, right? That's how I unfortunately ended the week. Fortunately, I didn't repeat that mistake of concentrating all my accounts. So I was green on some accounts today. I'm still green overall in the week. However, you know, I did some pretty amateur things and I overtraded. I took poor setups. Now, I did have a good stretch of about 7-8 days where we had 22 trades, 20 or 22 trades, and I had a 90% win rate. So 17 winners, 1 break even, and 2 losses, 90% across those 20 trades. That was great, and that set me up for a good round of payouts. I already had, you know, 3 rounds of payouts by early this week, so October has been great. But unfortunately, you know, I could have had a ton more payouts, and I've just set myself back on those accounts. So it is what it is, guys. This is trading. I really don't want to keep repeating mistakes. That's why I want to be transparent here and help you guys learn from my mistakes, right? If you're a member in the group, the goal is not to mirror trade. The goal is to trade the strategy properly. And as perfect as I strive to be, I didn't do great today. So we'll be back at it on Monday. I'm taking time to review. I'm taking time to analyze what went wrong and, you know, just be on my A game. So until next video, guys, this is trading, right? This is the business we're in. Like, comment, leave a follow. I appreciate it.